Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Invesco QQQ Trust, which is ticker symbol QQQ. This basically tracks the tech sector. And before I get into this chart, I'd like to welcome each and every one of our newest members, especially. Thank you for subscribing. Thank you for liking and commenting. And I'll get to that a little bit later, but it's because of your sharing and liking and commenting that this channel continues to grow. And I can't thank you enough. Now, looking at this chart, you could see we had a wild day yesterday. We had this big green candle where in the morning we gapped down on the CPI news. And as a result of that, we did hit my target from last week with that low target of 260.23. And yesterday I was talking to a group of our traders, and it looked as though we might get some follow through today to the upside. And we did that, but it didn't last very long. And if you remember from last week's report, I said once these targets hit on the downside, we could expect to see a little bit of a bounce, and that's exactly what we saw. So what does that mean for next week? Well, now that we have this big red candle, it's on lower volume, of course, but that lower volume brings us to, guess what, the 20-period moving average acting as resistance. It did that here, 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 and even towards the beginning and middle of August, where that resistance level just kept bumping its head right there against that 20-period moving average. So I do believe that we're going to go lower. I'm going to erase all these lines now that the targets were hit on the downside and redraw those to the downside. I'm going slightly lower right here. I think we're going to take out those lows from yesterday. I do think that we'll even see an increase in volume coming in to Monday. So keep an eye on that volume bar, because if we go lower and we break out below that low on higher volume, the oscillators down here will take a back seat to the price action. Remember, price and volume trump the oscillators. And with all that's going on in the world, there is still a lot of pressure on the markets, and I'll get to the geopolitical news towards the end of this segment. Now, looking at SPY, that's the S&P 500 ETF, you can see that, again, we hit the downside target. My last week's target was $350.66. We hit that. We blew through it on the opening and then traded back up with this huge bullish engulfing candle. And then guess what? Same thing, just like QQQ. We bumped our heads against this moving average. It's acting as resistance here, 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 and here. Once again, drop in volume on the way up. We didn't get any follow through whatsoever. And so now that that target on the downside is hit, what could we expect for next week? Now, this is a change of tune from just yesterday. One day makes a big difference. And that's why I put this market report out on Friday after the close, because it's how we close the week that determines what next week will look like. The buyers and sellers are battling it out. And in the end, who won at the end of this week? Well, that red candle tells us that the sellers followed through and completely stuffed it right in the face of these buyers. Now, let me talk a little bit about what happened yesterday. CPI numbers came out. Inflation is hot. The markets gapped down on the opening, and then it looked like option traders combined with short sellers covering their positions created a little bit of a short squeeze right here, and we rallied up. You know, if you read some of the financial publications, no one really put their finger on the very reason why that happened. But I was watching the option trading, and there was a massive volume on the put. So I'm not going to get too far into it, but there was massive put buying right on the opening. And that put buying was coupled up with long stock positions coming into the market. We saw that right across the board. Now, for those who trade options, what is that when you're long a put and long the stock? That's a synthetic long call. So they rallied up, created the short squeeze. They had their protection on the bottom in the form of that put. And then right towards the end of the day, they started selling it, and even on the opening, they sold it. So that was a perfect trade. It was more or less a manipulated short squeeze using options, and it combined that with the underlying stock. And that's the way I saw it based on the volume in the options yesterday alone. So what does that mean for next week? Well, we hit that downside target. I'm going right back down. I'm going out to take that low. right there. So the downside target for SPY is going to be 344.94. I think the volume will again increase on Monday on the way down. Oscillators will start to hinge here, creating some more downside momentum in the CCI and even in the stochastics. Now, with that, let's take a look at the VIX. The VIX, for the most part, is inversely related to the S&P, and this was an interesting forecast because if you recall, week after week, I did a two-part forecast. Said we would move lower, go down to 29.75, and then reverse the target and go right back up to 34.42. Interestingly enough, on Tuesday, we hit that target and went 1 penny higher than that target. Right there, we had that, remember, 34.42. We went to 34.43, hit that, and then came right back down on a pivot. So what do we have here? This is known as a spinning top. You generally find spinning tops and dojis at pivot points. And in addition to that, look what we have here on the trend line. The VIX is trending higher in a trading channel. You see, this is a trading channel. You have two parallel lines moving in that upward direction like that. We're at the bottom of this channel. So this line right here, coupled with the 20-period moving average, is most likely going to act as support. So maybe on Monday we'll drop just a little bit, bounce off of that moving average, and then I think we're going to start to move higher towards these highs, which would be a resistance from Wednesday right there. So again, slight downside target on the VIX to 31.07, then an upside target of 34.66, again, to test that resistance. Now, looking at the diamonds, ticker symbol DIA, we came close to hitting that target, but it didn't quite do that all the way. The downside target on that was 282.32. We came down to 286.62. Then we had the big bounce. And therefore, what do we see for next week? I think we're going to hit that target. Let me get rid of this horizontal line because that was a support level that was broken. And what I'm going to do is I'm going to draw a horizontal green dotted line to mark that low of 282.32. I think we're going right back down there. And then we'll have to see whether or not it bounces again. Remember, today's candle, while it was red, we had a higher low, higher high, but it was on lower volume. So that tells us that the buyers are weakening. Now, this is a little bit different than what we've seen in the other ETFs where the CCI is still heading up, but you have a very, very slight hinge right there. I don't know if you can see that. Let me magnify that for you. A little bit of a change of direction right there as we mark against this resistance right there. So this area up top, right where the high was from today, is going to act as resistance. I think we're going to head right back down to test that new support level, which is the target from last week. So that's DIA. Now looking at IWM, Russell 2000 ETF, this one was very interesting because it came down yesterday. Let me magnify that. Came right down to the penny of this support level that's been tested 3 times now. Right back here in June, we tested support there. We tested here. We bounced a little bit at that support level, rallied a little bit, hit resistance at that 20-period moving average, came back down, tested support again on the low from yesterday, rallied up, and now look, the CCI and the stochastics are heading right back down. So my IWM target, I'm going to get rid of this support level because I think we're going lower next week. Let me mark that green dotted line again. I think we're going right to that target. And then we'll see whether or not it bounces from there. So that is what it looks like for all the major ETFs. Now, for those of you that don't want to listen to the geopolitical news, that's okay. This is your time to take a break or close it out or start your weekend, whatever you want to do. But I have to talk about it because it's most definitely affecting the markets. Now, on this first slide, let me just set the stage and invite you to connect the dots. Right, because everything that we're looking at here as far as news, these are news headlines. This is just doing a search for news, and this is what's going to come up. Now, I sorted these in a sequence starting from January 20th. I just want to highlight this a little bit of time so you could see how this is playing out. On January 20th, 2021, Joe Biden came right in immediately and halted the XL pipeline, the Keystone XL pipeline. Now, he revoked the permits. And that continued, that discussion and narrative continued right through the summer. Look what happened. Pipeline halted. Again, blocks permits. This is according to the BBC. Please put your political flags down for a second and just listen to what I'm saying here, because connecting these dots and seeking out the news is most definitely going to help you with your trading and your investing, as you will soon see. Now, looking at November 8th, this is an article that came out through Newsweek talking about how shutting down the pipeline could send gas prices surging. Now, again, look at the timeline there. That's November of last year. January of this year, I did not know this. I guess I wasn't paying attention to the news coming out of Israel. Biden shuts down the Israeli East Med subsea pipeline. How many of you caught that one? I missed it. I will confess, I missed that one. But in this search, you could see that it pops right up there on January 19th. Now, on February 8th, this is where it gets really interesting. On February 8th, Biden made some comments promising that he will be shutting down the Nord Stream 2 pipeline. He was questioned by a reporter, and he just came right out and said, I promise you, we will be able to do that. This was announced and reported on through two separate channels right here in the search. But where does that leave us? Connect the dots. Remember, the theme here is energy. And what happened? Well, I can't tell you whether or not Biden was responsible for this, but some believe he held true to his promise. And right here on October 4th, the pipeline was hit. Shortly thereafter, 6 days after, Vladimir Putin takes action. And once again, what is on the table here? Energy. Energy, energy, energy. Oil, gas. What's happening from there? Well, Europe is suffering, obviously, but keep this theme in mind as I progress through the timeline here. Now, this is very, very interesting, because if you're cutting the Keystone Pipeline and now the Nord Stream 2 pipeline is ruptured, why in the world would you deplete your strategic petroleum reserves? It does not make sense at all. But when we get to the root of what's causing all this, it will make a lot of sense for you. Now, this is very dangerous right now, because at this point, I mentioned this last week, this becomes a national security issue right here. If, God forbid, we go to war, we don't have any oil to back us up in this oil reserve here. Very, very dangerous. And they said that they were going to replenish it when oil dropped below 80. That didn't happen. Not even a single barrel was purchased. We looked at the futures markets last week, and you could see there was no volume there. So keep this in mind. Remember, oil, energy is in the limelight. This is from AAA. You can see, obviously, that gas prices are moving right back up. This is the big one right here. Diesel. Got to keep an eye on diesel. Why? Because we pay for that in our shipping costs. Moving away from energy for a moment, check this out. We have barge prices per ton. This is absolutely incredible. This just came out early this week showing barge prices per ton. And we are now looking at hyperinflation. Went from $12 a ton in June to $90 a ton last week. Look at that chart. Straight up. Absolutely incredible. Now, what is that going to do to the cost of agricultural products and food costs? And well, food inflation right there is going to contribute to that. Fuel is going to contribute to more inflation. CPI is probably going to get worse. We'll have to see how the markets react to that. But I'm giving you all the news from right now so you can understand why I'm still bearish and I haven't changed my tone, not one single bit. Now, if you look at this, with the exception of Apple Computer, PC shipments plunged 20%. This is the steepest drop in more than 20 years, according to the Wall Street Journal. And this, again, is talking about supply chain issues. So remember, we have an energy crisis, we have a food supply crisis, we have shipments and supply chain crisis going on all at the same time. And just when you think it might be getting better, what happens? The IMF comes out and says the worst is yet to come. If you look down at the bottom right there, they are projecting that this is a contraction in 1/3 of the world. That's the IMF now. Right after that, Bank of America came out, said that we could start losing 175,000 jobs a month. It's according to Bank of America. Remember, this is just 4 days ago right here. And now what do we have? Bam! The big move in the markets yesterday. Now let me explain this to you, what happened yesterday. Like I said just a little while ago, option trading combined with short squeeze, with those option traders hedging themselves while they're creating the short squeeze, was an absolutely historic move. It was one of the biggest one-day moves and reversals, at least in my career. I could definitely say that. Whether or not in history, I don't know. I didn't verify that. But in my career in over 40 years, this is one of the most incredible one-day reversals I've seen. At the end of the day, I was doing a webinar and our members were looking at the high-low list here. This is the Wall Street Journal 52-week high, 52-week low list. Look at the number of highs versus the number of lows while we had that 1,400-point rally from the lows to the highs. Look at this. NASDAQ, 79 highs, 967 lows. Absolutely incredible. That's called the breadth of the market. The breadth of the market was extremely negative. Now here in this article, you can see that they did mention hedging in the option market in anticipation of even lower prices. I see it a little bit differently. It wasn't hedging. It was them creating a synthetic long call and pushing the market up into that short squeeze. Now, what I'm about to say right now is probably going to cause some heads to explode. I know that. I know I'm going to get some pushback, but I have to tell the truth. I have to shout it out because this is not coincidental. This is a plan. Folks, whether you believe it or not, we are already in a war. We've been in a war. We're in an economic war. We're in a war for green energy versus fossil fuel. We're in a war with the World Economic Forum. They are trying to push the Great Reset. Citizens around the world are resisting, and it's happening right before our eyes. And if you don't believe me, go back and listen to what Klaus Schwab said 7 months ago. Let me slow it down just a little bit because I just connected all the dots for you. He said structural changes are going to be coming to food, to energy, and to global supply chains. Didn't I just connect the dots for you? It's happening in energy first, food, because energy and the lack of it is going to affect the food chain, and global supply chains around the world in that order. Listen, folks, this is not Republican versus Democrat. This is the World Economic Forum and the global elitists against the U.S. because the U.S. is the only country getting in the way of their plans. Please, I know I'm going to get pushback on that, but hear me out. Listen to my perspective. Go out and search for the news. Go read his exact words as they were published after the World Economic Forum and after the World Government Summit. Listen to what he's saying. Don't read the news and what they interpret his words to be. Listen to his exact words, and it's going to make a lot of sense for you. Now, some of the other news that was not reported on, which is really big news in my opinion, is this right here. On Sunday, the 7th, this was a House resolution that was introduced. It's House Resolution 9157. I'm going to encourage each and every one of you to go to congress.gov, bookmark that, and track this along. Now, you're not going to get the summary on the congressional website page here, but if you search for the news, again, you're going to find a good explanation of what this is all about. Let me slow it down just a little bit. If we believe that the Western central banks are in trouble and the fiat currencies are about to collapse, this now makes a lot of sense. Now, some people say that this is just symbolic of a fight against the fiat currency and a fight against inflation, but there's a lot more to it. Go back one more slide here, and I want to show you the key words that are being introduced right here. This is to define the dollar as a fixed weight of gold, so you bring back the gold standard, and for other purposes. What are the other purposes? Bitcoin, cryptocurrency, central bank global currency perhaps? Remember, I talked about this months ago. Russia has linked gold to their ruble. China is linking gold to their yuan. India is doing the same thing. And who's the odd man out? Right here, the U.S. If they don't do something, they're going to be off the world stage economically because you could absolutely say goodbye to the petrodollar. And so bringing back the gold standard could actually save our currency. Again, going into the details here, some people say this will never pass. It doesn't matter if it passes or not. Here's the big deal. Read into this. If it passes, the U.S. Treasury and the Federal Reserve will have 30 months to publicly disclose all gold holdings and gold transactions. So in other words, they're going to be audited. Now, if this goes through Congress and it makes it through the Senate and it passes and goes to the executive branch, let's play this out now. Let's say Biden vetoes it. What is that going to do? It's going to create a flag. Why wouldn't you want to do this if we have runaway inflation? Why wouldn't you want to do this to protect your economy? It's going to raise flags. I believe that Congress will still move forward with an audit of the Federal Reserve, which in turn could open up a whole can of worms right there for the Fed, and then the big battle. What will that do to the markets? I can't believe that's going to be positive for the markets when all this happens. I cannot believe that. So keep an eye on this, folks. Now, there was an article that was published a while ago on thestreet.com. I was very happy to see how they highlighted some of my option trades. Now, we're getting a lot of folks asking me, how do you trade options? How do you trade options? What's a safe way to do it? Where do I start? Well, here's a good start for you. Go to street.com. I'll put the link to this article in the description box below, and you can get a good idea on what that is all about. It cites a couple of trades that I've done, one of which in Boyle. We did really well in Boyle trading the options, and our option traders are having an absolute field day in this market. Now, before I go, I just want to mention something to all of you. While this might sound like a really dark cloud coming over us right now, might be stressing some of you out, the volatility in the markets might be causing some of you to lose sleep, I'd like to encourage you to celebrate what's happening. I know it sounds crazy, but bear with me here. We have an opportunity, which I believe is one of the greatest opportunities in our life right now, to make money in a market using technical analysis. You see week after week how accurate these targets are. I'm not right all the time. I say that many times over and over and over again. I'm not right all of the time, but I am right most of the time. And you see it. Here's the evidence. If you're brand new, go back as far as you want. Go back 5 years. Go back 1 year. Look at every single market report that I put out and take note of the targets and how many of them hit. It's not a phenomenon. It's predictable. A chart is nothing more than a history of price action. It tells us where the buyers are stacking up. It tells us when the sellers are coming in. These candles and the way they're colored, the way they're positioned, give us some signals that tell us which way or what's the highest probability of a move up or down. So if you're just watching the financial news and hoping that one day you're going to get this pick of the day that's going to create a fortune for you, I would say don't count on that too much. Count on your own abilities. Celebrate what's happening. Be optimistic, because if in fact we do wind up in an economic crisis like never before, you have to be strong for the people around you, your family, your neighbors. If you're making more money than you need or what you need for your family and your retirement, you have money left over, go help someone with it. If someone down the road can't buy food for themselves because they can't afford it because they're on Social Security and that's not paying the bills, go buy them a bunch of food and have it delivered on their porch. We do it with ButcherBox. I'm not going to promote ButcherBox. I don't get any benefit from that. I don't get paid from that. But go look at ButcherBox. Go order a ButcherBox full of food to someone who needs some food. Do it anonymously. I'm telling you, when you do that, whoa, it's going to change your life. It's absolutely going to change your life to do something anonymously like that, knowing that your life has a purpose to it, that the money you're making from the market is doing good things for people that can't afford it. It's going to give you a whole new perspective as to why we're even doing this in the first place. Yes, we can make money on the way down, and we're going to do it very well. There will be a time when the market bottoms out. There will be a time when the economy turns around and goes back into a bull market. It's just not now, folks. It's just not now. I'm here with you. Share this video. Share it with people that, even if they could care less about charts, at least the last message here of helping your neighbor might get through. Share it, like it, click the notification bell. Help us grow this channel. I know you're doing it. I thank you so much for doing it. We have a lot of work ahead of us. I would love to double this, to go from 10, 12,000 to 20, 24,000. We can do that. And now we're reaching more people, and we're helping them with some tools that can put the odds in their favor when the whole world is against them right now. That's where I'm coming from, folks. I hope you got the message. Please, for those of you that disagree with my opinions, understand that that's my opinion. You have your opinion. I have mine. I'll be very happy to debate that in a classy sort of way. Listen, we're in this together. We're in it together. We can go through it together. And I'm telling you, life is going to be a lot better when we stick together as a large group of people. It's very hard going out there as a lone wolf, trying to muscle your way through a tough economy. So with that, folks, you have a great weekend. I'll talk to you soon. So long.
As traders, we are beholden to forces greater than any one person. Forces that can lift spirits or leave scars. There are those who passively resign to their fate, leave their decisions to others, and let the chips fall where they may. And then there are the rebels, A battle-tested team of expert technical analysts, astute educators, tactical momentum traders, crypto connoisseurs, and the select few who take the market head-on so that they may have a say in their own destiny. Guided by the mantra, discipline dictates action. Discipline dictates action. Discipline dictates action. Today, we rebels gather, a community of mavericks, forging a path through the ups and downs on our own terms. Welcome to the rebellion.